He called the fall of Lehman Brothers 5 months in advance, as well as the Bitcoin crash. And now on October 19th, this expert analyst is stepping forward with his biggest and, quite frankly, scariest prediction to date, warning that a massive market event nobody sees coming will surprise most investors and ruin the retirements of millions of Americans. If you don't fully understand what's happening, every dollar you spent your life earning, saving, and investing could be wiped out in the coming weeks. And according to his research, it might never recover. And so, on October 19th, he's revealing the details of this big prediction, as well as the name of 2 major companies you likely own, which he warns you need to sell immediately. Best of all, he's sharing all of this with you 100% free. For more details and to sign up for this event, simply go to nextmarketmeltdown.com. I know I'll be tuned in to see this important information. Again, that's nextmarketmeltdown.com. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research, in studio with E.B. Tucker, author of Why Gold, Why Now? E.B., welcome to New York City. Good to be with you.
Thanks for having me. If it was anyone else, I would have said no, but I couldn't refuse the invitation.
Well, thank you. I know, because you were telling me you've been kind of silent. You've been kind of silent.
Well, I gave a lot of advice this summer, and I don't think anyone took it. I mean, it reminds me of, I wrote a book about the war against your wealth, and I think, we sold 50,000 copies. Nobody read it. But this summer, I told people buy treasury bills and go to a concert and don't mess around with the market. I've done that, and I feel great. And I think a lot of people didn't do that. They keep doing other things and then kind of are angry with the result they get.
Well, why do you think that is? Is it just denial's a happy place?
No,
it's hard
I
to
think
change?
people have psychological issues with money, and I think they like to gamble and blame someone when they don't win. So it's the equivalent of walking into a casino and pulling the slot machine. If you win, you take the money. If you lose, you blame the person at the door that waved the flyer to get you in there. That's very common. I've been in this for a long time. Remember, I wrote newsletters.
Yeah.
People would buy a stock from the newsletter. They wouldn't read the newsletter. Then they would complain if they lost money and never hear from them if they make money. But this is life. This
Yes.
is life. Okay, now, but this is my message for people right now, is that, and we can talk about this in more detail, but something is going to break. Don't let it be you. Okay, so that's what's happening right now, is something is going to break in the system, in the financial system. And you don't want it to be you. That's how you need to see things. That's how I see things. And I think that my view in the summer was right. So far, it's been a good view.
Well,
and I think we're going to see more
That's, I
of that.
believe, what you said the last time you were on.
Yeah.
You were saying that you were expecting something big, something major. You didn't know what it quite was at the time. Do you feel it's happened, or it's still yet to come?
No, it's yet to happen. And I don't think it matters what it is. And I also think that people playing it don't care what it is either. But there's not been enough pain yet. Something's got to crack. Maybe it's a German bank. Maybe it's something. I don't think it's going to be Credit Suisse.
Right.
I think it's really strange that Credit Suisse is getting so much negativity. It makes me think people are trying to dismantle it and maybe buy off the parts. Somebody wants it, but I think there's German banks with more problems.
So do you think it's
Credit
premature? I mean, using Credit Suisse, but people are saying the next Lehman moment is on the
I don't
verge
think
of
it's like
happening.
it's not like that. I don't think it's I don't think it's the same type of thing. I think you have different problems. Everybody prepares for the last crisis, but it's not that kind of problem. Like in 2008, if you were preparing for a tech crash, it didn't happen. You had a real estate crash. So I don't think it's the same way. I don't think it matters what it is. I think you need to say, what's going on here? Mortgage rates are over 7. They're going to go to 8. The Treasury curve is completely out of whack. I mean, you have the 2-year note, yields higher than the 10-year note. So that means for people, let's dumb this down. I mean, you can loan money to the government for 2 years and make more money than loaning it for 10 years.
And I think that's the biggest red flag
Huge
there is now.
Red flags abound everywhere. I mean, it's all these problems. The tech stocks are down, some of them 50% or more. And what people need to understand is I've been in this game for, 20-something years. And so you lose all your emotion. So I look at these stock charts, and they're in death crosses. What that means is that the moving averages have crossed, and it's in a downtrend. So I'm like, the stocks are in a downtrend. If they have a small rally, it doesn't really matter. It's in a downtrend.
I want to take a step back and break down some key events with you, okay? Because we're speaking, latest inflation numbers just came out, 0.4% in September. Inflation's getting hotter. Justification for the Fed to keep hiking. We're expecting another 75 basis points.
Yeah.
Okay, why are the rate hikes not working? Is it too soon? How many cycles do we need? What's your view and
have
take?
a long way to, I mean, it's because you have a long way to go and it's unknowable how high they need to go. But all they're doing is they're going to crank it up until they get the amount of pain they need. What people need to understand is this is not a market, okay? A market is where buyers and sellers or lenders and borrowers set the rates for which they exchange something. I talk about this in my book. That's a market, okay? This is a centrally planned system. I don't want to say that, I don't want to compare it to other systems because it gets bad, people take the wrong idea. But centrally planned means we sit around and wait for the bankers, the Ministry of Economic Truth or something to tell us what the next thing. You did go back to the 70s, Arthur Burns Fed. Nobody would have ever seen all the Fed governors talking on television and Twitter and giving speeches. And these people are like media celebrities. I mean, you turn Bloomberg on and at 2 o'clock we'll have this one and this one and this one. They're talking all the time. What that means is there's a centrally planned thing going on, okay? And you're sitting around with bated breath waiting for them to tell you that prices went up or whatever. This is all nonsense. They're going to raise interest rates until something cracks and gives them some sort of leverage that they're looking for on the world stage. Doesn't matter what that is, it's not you. Okay, if you're sitting in Tulsa in a recliner, with your Webull account or something, look, you need to dial it back a little bit, okay? It doesn't matter which bank it is that crashes. You need to worry about you, okay? The dollar is ripping higher, all right? There's people that have to roll over debt and all these. This is a huge problem, huge.
Okay. But it feels so hard in this environment to seize that control back. I'm speaking for those investors where you're given all this information and it's, and I've spoken to other experts like yourself, you were saying you have to make sure, Rick Rule came on saying make sure your own house is in order.
Yes.
Absolutely. But how does one, it's almost overwhelming. How do I take the control back?
I understand, because what happens is you go so many years of staring at your device and your dopamine is going all the time and the device tells you what to do and you do it.
Yes.
Tells you to buy a product and you buy it and you're just so confused, okay? So people are starting out with a disadvantage. They're confused. They never go into silence. They never have 5 minutes in a room by themselves, quiet, to just settle down. They have to be stimulated all the time, and then they start panicking. And they've just done everything that they've been told to do, and they've been in the real estate boom and the tech stocks, and it's just very confusing for people. So I would try to go with the flow. I mean, you can't go and educate yourself in a day. I mean, nobody has an answer. Guys like Rick is a very smart guy. I mean, I've spent a lot of time with him. Like, Rick has been studying this stuff for a long time, and I tried to tell someone the other day, I've been spending my weekends and nights reading and studying for 25 years. I must have read hundreds of thousands of pages and written 2 million plus words. What were you doing during that time? If you were watching the Yankees or something, that's nice. That's nice. But don't expect that you can understand what I'm not trying to be condescending. What I'm trying to say is that, like, stop looking for some sort of silver bullet answer, like you buy the VIX or something and you come out a hero. It's crazy. You're in a period right now where you don't know what's going to happen because the market's not determining what's going to happen. This is not a market. You're waiting.
Is there not a world, or when was the last time we lived with no QE or tightening? What's the middle point? What was it?
A market. So that was a long time ago.
I don't remember.
Yeah, this is before our time, but that was a market where the lenders and the borrowers set the price of money, and that's long gone. It's never coming back, okay? And I said in my newsletter that in 2016, that 8-year presidential cycle, the debt would double. It went from 18 trillion, it's 31 trillion now. It's never going to stop. It's never going to come down. Forget about it. It's never going to come down. You're never going to stop this central bank intervention, okay? You're going to have, I'll tell you what's going to happen. And people, try to hang with me here, because I know this sounds confusing, but it's not. You're going to have yield curve control. The Japanese are already doing it, okay? The British are already doing it. You're seeing some headlines about this. What that means is they're going to fix the price of interest along the yield curve. They're going to basically set it and let the market mess with it, but they're going to cap it at certain levels. The Japanese have capped their 10-year at 25 basis points, and they're printing unlimited money to defend that. And everybody's saying, yeah, surely that can't work. It's going to work great, believe me. They're going to set the price of money, and they're going to defend the price of money because they have ultimate control of the money, because it's not a market. It's a bunch of guys sitting, and girls in suits, telling you about economics and you're waiting for them, like dogs waiting for their owner to come home to see what the next interest rate fix is going to be. This is a fix. Remember, it's not set by people loaning money. It's fixed. Okay, so that's what people, once you see that, it's a lot less confusing.
What does that mean for us on a day-to-day basis?
Well, I mean, it's not good. Okay, so good, because if you're living this confused digital lifestyle where you're just responding to each thing they tell you to do, you're never going to get ahead of this. So personally, for me, I sold a lot of real estate earlier this year, and I bought treasury bills. I'm still buying a lot of treasury bills. I have the gold royalties, which I'm really happy with, because I'll tell you something about gold. Nothing's more comforting than holding gold in your hands. I mean, it's really wild how you feel as a person with that. Gold royalties are even better because you have, Metal's got 90, 80 something, I don't know how many we even have, but less than 100. And you have these things forever, and you don't pay any money to drill into all this stuff. And people read my book, it doesn't matter what the gold price does. Right. The gold price is down 8% this year. People are acting like they're so disappointed. Netflix is down like 50%. I mean, are you crazy?
Yeah.
So in the gold, there's no liability. It doesn't matter. And the price is set in the futures market.
But again, I think that goes back to your point of, you and I have been studying gold. I mean, it's been part of my life for, 15 years now. So I'm very comfortable with, like you said, you read the headlines, gold's down 8% year to date, and I'm like, okay.
Try to buy some. Okay, it's very difficult.
Yeah.
So the premium on Eagles, I'm majorly connected in the business.
Yes.
9.5%.
Crazy.
Friends and family rate. Silver Eagles, even crazier, is 70% premium. It's really wild.
And that gets back to the point of, okay, premiums are so high, demand through the roof. I see Asian buyers desperate to pick up, whatever the Westerners are selling, whatnot.
Yeah.
Okay, so why are we not seeing this in the price?
Look, I mean, maybe we are. I mean, there's a lot of pressure to hold the price down, and it's not really going down that much. I mean, I saw some information this year where in the futures market, we'd seen, close to just had billion-dollar days of
pressure from whom?
Well, it's difficult. Let's not speculate, but the futures market sets the price. Like when the Ukraine situation happened and gold went to 2070, I noticed that 41 million ounces changed hands on the COMEX in one day. That's an entire year's worth of supply. So there's no way that Barrick Gold and everyone decided in one day to sell a whole year's of the supply. So you have this. This is what sets the market. Now let's compare it by talking about oil, because Saudi Arabia has been very upset with the fact that the paper market sets the oil price, and has been very outspoken about the fact that they aim to challenge the fact that New York sets the. So why don't we just look at that and say, okay, the trick works in every commodity market. How long is it going to work in gold? Who cares? Really, who cares? I mean, in my book, I talk about how much gold to own. Very little. If you have 3 or 4% gold or something, it's kind of a lot of gold. And you have this gold, and then you have your royalty stocks. I mean, I'm sleeping very well, by the way. I mean, I've had like very little disturbance in my life, and I encounter these people that are in a panic. And I'm thinking, I don't know what you're doing, but you're not doing anything that I'm doing because you seem frazzled.
Well, I'll tell you why they seem frazzled. You see the headlines, and maybe you don't care for them, like Jamie Dimon, J.P. Morgan's Jamie Dimon coming out saying recession, economic hurricane. So when you see this, what are you thinking? You're saying recession 6 to 9 months. So are you thinking, okay, bring it? All right.
Watching Wheel of Fortune or something. I mean, it's just like a show. I mean, it's a media show. It has nothing to do with really what's really happening. I mean, these guys are big, important figures, and they have to support the narratives that are going on. And so I think Jamie is really good at running the world's largest bank. And I don't think it's not like he's sitting there calculating about a recession. I mean, there's an agenda, like a bigger agenda, not for him. I'm saying generally, he's doing what he has to do. But whatever he says, you don't make decisions off of what he's saying. I mean, he's like a soap opera star.
I just want to share a personal story just on that note, because I was telling you offline, I'm just back I was in Italy, in Rome, lineups. I mean, you can't get into Hermes if you paid them. It's like, take my money, and they're like, no, we're good. Roll it. People line it up. Yeah. Restaurants sold out. Hotels, you can't get a room. I mean, I lived there, and I've never seen it this insane. Yeah. Right? So you're looking around.
Full airplanes.
full
Yeah,
airplane.
yeah.
And it was Americans, obviously,
Yeah.
but a lot of Europeans. And you're thinking, okay, what about inflation, energy crisis, everything we're hearing about back home? Then I went into small towns, remote towns where people are making, 40, 50,000 euro. Average workers, and I went into one of this pizzeria I even tweeted about that I love, threatening, saying, we might not be able to stay open because our energy bills are through the roof.
25 times.
Right,
what we're
like
used to,
1,500
yeah.
euro
Yeah,
energy
yeah.
bills, and your heart just breaks for these folks. So there's this huge divide. So
Yeah.
what it seems like to me is those who are wealthy keep being wealthy, and it's fine. But the average folks,
Yeah.
right,
It's
the
tough.
average folks,
Yeah, it's tough.
It's really tough.
Yeah, it's always tough at that level, though. But the thing is that the energy prices are going to go up. The oil price is going to go up. That's going to happen. And the energy companies are interesting investments. I've bought them for my kids. I'm very positive on some of the major American energy producers because the cost of producing energy is going to go higher because there's no new supply.
Yeah.
There's no investment in
Yeah.
supply. It's the same with gold. But the problem is with gold is that you don't put it in your gas tank every day. So on this subject, I just wanted to say something that I find very interesting is that there was, I don't want to get these numbers wrong, but between 2009 and 19, the hydrocarbon energy portion of the energy mix went from 80.5% to 79.5%. So it went down by 1%, even though we invested $2.5 trillion in the green energy transition. It's very real, by the way, the green energy trend. I'm very close to that transition. It's happening. But you still need a lot of oil. You need lots and lots of oil, and you're going to need lots of oil for a long time. Where are you going to get the oil? So it's really interesting to me. And gold is to me is very similar because you have this worldwide market, and the producers have been suffering with no investment for years and years and years, and it just doesn't have some of the same dynamics because you don't consume it every day.
Just getting back to, I guess, our original points, I wanted to get your thoughts on Bernanke, Ben Bernanke, former
Yeah.
Fed chair, getting the Nobel Peace Prize for economics.
Yeah.
This was the man that in 2009 promised the Fed's balance sheet would be brought back to normality.
Yeah.
Is it just one big part of the machine here?
Well, you know when someone gets the Nobel Prize, you know that they followed instructions. Because that's how the prize is awarded, is who does a good job of selling some bigger agenda type item. If you come out there and speak very directly, about like Austrian economic thoughts and stuff, there's no prize for you. In fact, no one knows who you are,
right.
Because there's not an opinion that matches what's going on. So Bernanke, I think the thing about Bernanke that's interesting is he wrote an op-ed saying that he was going to do QE in 2011. And he said, and I remember seeing this and I disregarded this, okay, but I should have listened to him because he told the truth. He said the American psyche is tied to the home value and the 401k value, and the QE is going to stabilize those. It's going to kind of slowly levitate those two things. And that's exactly what happened, okay? And now you're going backwards. So now you're quickly trying to rearrange that because I think the U.S. is under external pressures and has to play on the world stage.
Well, let's talk about that. The strength of the U.S. dollar, will it be its ultimate demise? Will it backfire?
At some point, it's going to turn, and then you go the other way. So when is that point? It's not yet, but it's probably closer to the end than the beginning of the run. It's an unsustainable run. You know what Yankee bonds are? It's when an international company sells a bond in New York. So you have all these Yankee bonds, and companies can't pay the money back. Like it's too hard for them to, and then other central banks are running down reserves to stabilize their currencies. Well, think about that. If you're the U.S., that's a massive amount of power. Because say you're negotiating with another country and it's burning out all of its reserves, trying to keep social unrest is the big problem. So you want to keep people from picking up rocks. Nobody has guns anymore. So good news is you don't have anybody who can really do anything, but they'll pick up rocks and throw them at the politicians. So the thing is, you want to prevent that. All uprisings start from people can't afford food. This is a huge problem. So the U.S. realizes you keep this dollar moving a little bit longer, and these guys are going to be really ready to what I call kiss the ring, which means I'll do whatever you say. That's a lot of power. So the U.S., everybody talks about the U.S. is going to break. Yeah. Maybe. Eventually everything breaks. That's the truth of life, is that nothing is permanent, okay? So eventually the U.S. breaks. Probably not soon. it's just a guess, but I would not be betting on the demise of the U.S. at this moment. Yeah, I would stay out of that. What I would do is it's like when people ask me about things that are very sensitive and complicated. I say, I don't know. I just don't know. It's really complicated.
Just quickly, your thoughts on Russia looking to create their own LBMA, their own gold standard. Is that something we need to be watching closely, or?
Well, yes. I mean, what I can't figure out is there cooperation between these parties, because you have basically, it's kind of like when you watch wrestling, you have a show going on,
right?
And they've agreed, the Macho Man Randy Savage and Ric Flair are friends. They've agreed that here's how the match is going to go, and tonight you're going to win. I don't know if there's agreement or if there's real tension
with the LBMA,
because with all this stuff, because think about it, back in the 70s, we know now that there were times when there was explicit fighting and implicit agreement on certain things. I mean, you had grain, you had all these things that happened in the 70s. People don't really remember these things, but there's great books about them. So I don't know, when you take gold, for example, or you take the oil situation, the U.S. is trying to cap Russian oil prices, but then it can't cap them because OPEC's now not going to produce as much, and then the price goes up and the strategic reserve is down. It's very complicated. So you don't know what everybody's good with and what they're not good with. Russians have a lot of gold. They produce a lot of gold. They produce a lot of oil. They produce a lot of resources. And they have a somewhat interesting economic system that's not leveraged. It's very difficult to say what they're really up to.
I would have to agree.
It's hard to know.
EB, bring it home for us. I mean, I'm sitting across from you. Your skin is glowing. So those
wow.
blackberries and raw milk is doing wonders for you. You always
the
give us
raw
some.
milk. Yeah, I have a vegan place I go here for lunch sometimes that I'm crazy for in New York called Le Botaniste. They have like 3 locations or 4. It's really amazing. But I'll tell you what I've been telling people is you have to stay away from seed oils. You know. Yeah. So seed oils is like canola oil and sunflower, rapeseed oil. These things are really bad for your body. You know, the soy and the corn. You can't digest corn. So just think about that. Corn is in everything.
Don't eat corn on the cob.
It's everything cheap that you eat is filled with corn and soy and all this stuff. You know? So don't be a cheapskate. When you go when I eat at my vegan place here for lunch, it's like $30, and there's no, and I'm so happy to spend the money because I think to myself, what else is the money for? Is to put things into your system that are
no seed oils.
No seed oils. Just get rid of them.
It takes 5 years to clear out of your system.
I believe that. Yeah. Now, obviously, sometimes you can't avoid it. You're on a flight or something. What are you going to do? But you can't be taking your food around with you everywhere. But you can do the 80-20 rule. So I say to people, if 80% of your diet is pretty well controlled, then you have room for the 20%. You don't have to worry about it. You don't have to be so strict.
And I hope you don't get bumped into by the people on their phones here on the sidewalks of New York.
What I like is when you're at dinner, and I was at St. Ambrose last night, and I'm watching this couple, and both of them are on the phone, and I'm thinking,
that's the best.
Why even go out? So leave your phone at home, or on the subway is a great place, no phone. You'll be the only person with no phone, and you notice everything.
It's true.
And you don't have to read headlines because you're seeing them in real time with your own eyes.
Yeah. Well, it was a pleasure having you. Enjoy your time in New York. Come back for another segment. We have so much to talk about.
I'm here all the time.
And then I love the comments. Like, we spoke for so long, and then they're like, you didn't ask Ebi this. You didn't ask Ebi that.
Be here all day.
It's like, give me a break, guys. Yeah. All right, Ebi, thank you so much, and thank you all for watching. We'll have much more great content coming your way, so be sure to stay tuned and signed up at danielacamboni.com so you can stay on top of all these awesome interviews. That's it for me. Have a great day.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.